And now, finally, we arrive at the human layer of capital, where judgment, trust, and guidance matter the most. In an increasingly complex investment environment, information is abundant, but wisdom is scarce. And so the role of the advisor is evolving from product selection to principled guidance, from transaction to long-term partnership. And so our final session of the day explores how purpose-driven advisory can elevate the quality of capital flowing through the market. To talk all of this and more, please welcome Vikash Gupta, founder and CEO of VAR Capital, Mohammed, Wassim, Khayata, CEO, Maryah Community Bank, Khalil Bawab, CEO, Local and Regional Markets at Beltone Holding, and your moderator, Darius Alexander, Managing Director at FDI Consulting.
Thank you, everybody, for joining and sticking through to the last panel for today. Thank you very much. Obviously, a huge thank you to Forbes Middle East and Beltone for hosting us for this wonderful event in Abu Dhabi. As our MC said, I think we can all see the scale of migration of capital and inflow of investment professionals that are moving to the UAE. And obviously, with that direction of travel, trust and robust advisory has never been as important as it is now. And so we're going to use the next 20 minutes or so to explore that topic. And we're joined by an esteemed group of leaders in their field across banking, finance, and investment management. Vikash Gupta, founder and CEO of VAR Capital, Wassim Khayata, CEO of Maryah Community Bank, and Khalil Bawab, CEO for local and regional markets of Beltone Holding. Before we kick off, if each of you can just say a few words about your business and why you're in the region. Vikash, with yourself.
Hi, I'm new to the region, just moved 5 months ago. So thank you everyone for welcoming me very warmly. My name is Vikash Gupta. I'm the CEO of VAR Capital. We are a multi-family office based in London and now in UAE as well.
Yes, so my name is Mohammed Wassim. 32 years experience, started with NBAD, now FAB, did automation of the capital domestic market and later founder of the Abu Dhabi Stock Exchange. Was the IPO managers for lots of IPOs, starting from Abu Dhabi Islamic Bank, Ahmar, etc. I'm now the CEO of M-Bank. We have, since this is an investment forum, so we have the new era of investment, which is the digital asset investment platform, a company regulated by the capital market authorities under the name of Emirates Coin Investment.
Thank you, Wassim.
Hi, I'm Khalil Bawab. I have an experience of 29 years. I started in banking, first commercial banking, Arab banks, then I moved to asset management for 11.5 years at EFGs and CEO of Mr. Capital, the investment bank arm for Bankmas. And proudly I joined Beltone with its new project 2.5 years ago. The CEO for capital markets, which is a direct and indirect access to the market.
Thank you very much. Starting with yourself, Vikash, I think we can all see over the last few years the behaviors and patterns of investors, retail, institutional, accredited, have changed significantly, and therefore, obviously, advisory services need to stay nimble and evolve as well. And investor participation has also continued to skyrocket. With that does come some pitfalls that investors need to be guided through. So I guess with that perspective, from your vantage point, what do you see that has fundamentally shifted in terms of how individuals are engaging with capital and investing in the markets? And what do investors need to do to keep pace?
Yep. So I've advised clients for over 20 years now, and the main thing which has changed is the information availability. So earlier people would go to Financial Times, Bloomberg, but now they're going to Reddit, WhatsApp messages, and so on. And I think it creates a lot of challenges for advisors, because obviously, A, they're not aware of the new asset classes, some of the meme stocks, and so on. So fundamentally, what needs to happen is the advisors need to take a step back and tell the clients, look, you can do the meme stocks, you can buy crypto and other coins and so on, but you just do it as part of a wider asset allocation. So don't forget the bigger picture. So this is your kind of long-term money. This is your what we call as play money or fun money, rather than pushing back on these things, because that can create some some challenges between, especially newer clients. They're like, oh, you're an old school advisor. I need a new school advisor. And guess who the advisor is? Reddit. So in order to protect your clients, I would say, first of all, align with them. Let them learn through this experience. And overall, I hope they will understand that as part of wider asset allocation, having some fun stuff on the side makes a lot of sense.
It's interesting. The first point you mentioned was information availability. And so just going to yourself, Wassim, no asset class is there such a greater proliferation of social tips and accessible information than digital assets. And so kind of from your perspective as a digital native bank and an investment platform, obviously while the innovation is there, investor education is critical. And so as kind of the investor ecosystem becomes more fast-paced and information is more accessible, what role do you see banks needing to play in terms of improving financial literacy and taking kind of proactive steps for kind of really robust investor education?
Okay, in my opinion, it's not only what's the return of investment. In today's investment environment, we can see a lot of volatility. Mm-hmm. So there isn't an asset class like gold that we can say it's a steady and is going to give you a guaranteed return of X, Y, or Z. So the number one most important, I think, function of investment bankers, advisors, is to understand the customer's purpose of investment and to make it ethical with absolutely a clear purpose. So trust, resilience is the new alpha today. And that can be achieved through transparency and education, not necessarily sitting with customers and explaining to them, but rather simplifying the purpose of investment, how an investment portfolio is built, and what are the risks to start with, and what are the mitigations and strategies to provide resilient returns at an acceptable risk levels.
And it's interesting where you mentioned kind of volatility, and we've all seen what's been happening in the Bitcoin market and kind of equity markets at large. Shifting to yourself, Khalil, I think where Wassim talks about kind of market volatility, often investors are entering markets at volatile cycles, and sometimes for the first time. You've spoken a lot about the role of advisors being kind of geared towards investor formation, i.e. beyond simple portfolio construction. Can you give us a bit of context in terms of what that means practically in terms of an investor's kind of life cycle?
Sure. The business of selling the product is far from over, and we are in the business of selling the need. We are forward-looking, and we are in the business of redefining the need. As an advisor, we should understand the person before the portfolio, educate before execution, rely on principles rather than forecasts. The essence of what we're doing is understanding the needs of the client or redefining them. Why? Because financial industry and the financial literacy is quite complex for many common people. For us, it's easy. The way we're doing it, we already passed an era of accessibility. Accessibility on its own is not the end of it. We want to democratize wealth management. We want to personalize it. The best way to do it is via data science, AI, and digital channels. This is the way we see it. Hence, our product launch strategy is geared towards this. So we have been launching funds for the past 2 years, currently 14 probably by end of this month, it's going to be another 2. So basically, we're filling the quadrants of low, medium, and high risk, conventional, Sharia compliant, and ESG compliant. So we need to understand the need and the goals of the client, the risk profile, the liquidity needs. Even the liquidity needs, we have been focused on basically structuring all of our funds with an easy entry, easy exit, no barriers. So all of our funds, 0 subscription fees, 0 redemption fees. The IC prices are just $1 or £1 to facilitate all that. Basically, the next phase is to predict your goals. Once you predict your goals, maybe you have 2 people. Both of them have a certain sum of money. One of them wants to have an education plan, and another has a retirement plan. They're completely different. But at the end of the day, it's all about asset allocation in this case. And that is the context we're trying to talk about here.
Yeah, I love that. Putting people before portfolio. I think far too much we talk process and asset class rather than individual goals. You touched on risk, and obviously attitude to risk is a very complex field. So building on that point, coming back to you, Vikash, obviously you deal with accredited, sophisticated investors day to day, but for kind of common man, woman on street, even those that may be financially savvy, they may not have the awareness of how to maintain discipline, to your point on risk, Khalil. How do you tailor advice so that clients, say, with similar wealth, and it could be substantial wealth, don't end up with the same portfolio strategies or asset allocation strategies, or even then are prone to kind of the same mistakes?
Yeah. No, thanks, Darius. I think before we tailor the advice, I think many advisors don't spend enough time understanding their clients. And I'll give you an example. Some client may say, look, I'm high risk, I don't need the money, just put whatever the risk assets you want. But when volatility starts, they become really unhappy and nervous. So I think what advisors should do is kind of show them some scenarios. When client says, I'm high risk, saying, look, this is how your portfolio will look like. Are you happy to lose 10, 20% or move 10, 20% and your 5 million will become 3.5 million before it becomes 6? And then you start seeing their real, their real self. So I think once we understand our clients slightly more in depth, then we can tailor their education. And in terms of tailoring the education, rather than just giving them generic BS about finance, which we are all do pretty badly, I think it's also about advisors knowing history. So, if we can give anecdotes, if we can give historical examples of what happened in 2008, 2001, etc., clients then understand what exactly it means to invest their money. So I think, having a deeper understanding of your client's psyche and their capacity to take risk, and B, knowing history, so we can give real examples of how the portfolio could perform in certain cycles, will be quite key to helping clients not make mistakes.
You highlight a critical piece, which is trust, and our MC mentioned it at the beginning. And when you pair that with different scenarios, it brings me to a question to yourself, Wassim. I think we can all agree it's easy to build trust in bull cycles, but during bear markets and drawdowns, that's when the relationship you've built with your client is really tested, right? You've built a phenomenal brand very quickly in the region and significant share. So with that learning, if you can kind of share with us, how do you build that trust long term, especially with first-time investors, and especially during kind of market downturns and drawdowns?
So in my opinion, using technology can give you an edge, not to sell product, but to tell the customer what is the next suitable product. So customer profiling and risk profiling of each and every customer using hyper-personalization tools is key to make the right product given to the client and to make the bank or the advisor available when the client needs you. So as you know, previously in wealth management and in investment banking, it was only provided to a certain customers, the upper side. Today, if you look at the mass, as we heard about microfinance, there's micro investments, which is basically to provide a community-based investment advisory. And the best way and the only way to do this is to use AI, robo-advisors, and customer risk profiling to give personalized products and services. This is where I think is important for investment bankers to provide a better service and customized to bigger market share.
It's interesting. So there's obviously a deep role for tech, but then there's a critical human element as well. Purpose is something that I think we should touch on in the kind of, we've got a few minutes left. Khalil, you mentioned a number of different verticals, ESG, Sharia. What evidence do you see whereby principle-driven, tailored advisory improves investor attention, especially through volatile market cycles?
We see it in numbers. We have grown our client base from 70,000 a year ago to around 250,000 as we speak. We have grown our assets under management by more than 100%, from 22 billion to 44 billion as we speak, via new products, via innovation, via index trackers, which is kind of new to the market. We're the only company in Egypt that has an ETF on the EGX30, and we're pushing to that. For us, basically, it's three pillars. It is context before capital. So basically, the benchmark is not going to raise your kids or make them achieve their education, but your portfolio must. Education is real alpha. So a lot of what we're doing is financial literacy, educating the client. It's not driving the client to anything or even advising the client. The client needs to understand the portfolio. Last but not least, trust. Trust compounds faster pass than returns. So basically, performance brings clients once, but principles keep them. So this is why we have the direct and the indirect access to the market. Hence, wealth management is going to drive the client to what's most suitable for the client, for his goals, with the risk profile and the liquidity needs he desires.
So I guess to kind of sum up those last few points, trust, education, smart use of tech, but with purpose-driven incentives. We've only got a few minutes left, so bonus question for each of you, but in two parts. So I think it would be great for you to share with us, A, what do you see as the most important behavioral shift or market trend that you think is going to most materially impact the investment markets? And B, what makes the UAE one of the most attractive markets globally? You're both veterans of the region, and you've obviously felt compelled to move here. So starting with yourself, Vikash, and we'll go across.
Okay. Well, I mean, I think I'll go slightly tangential, but I think one thing which we didn't cover is communication as well. So, because the clients are getting so much news from everywhere, if the advisor doesn't communicate more frequently with the client, they will rely on other third-party news. So I think in terms of how to kind of manage your client better, I think communicating is very important, especially in a volatile market. That's what I would say. And in terms of the region, it's the most exciting region in the world. I'm so happy to be here. Especially I'm coming from cold and dark, grey London, so very, very happy to be here. I think the region has immense potential.
Brilliant. Wassim?
Well, I'll start with the second part, which is UAE. But I think, especially about UAE has been successful to attract the best breed of investment banking. And you can see platforms like the ADGM, the IFC, the central bank regulations. They provide the best platform for alternative investments and options for customers. So you see lots of sophisticated companies who could provide services. The only question that I always ask myself, how can a customer like myself, how can I choose amongst all these advisors that are available in the country? Do I go for FAB, investment banking? Do I go HSBC or ABC company that I haven't heard of, but from Switzerland with a track record? I think what is the most important thing for this country to do better in terms of investment banking is to start with investment banking index from a reliable third party, like Moody's rating. They tell you which is a trustworthy bank, which is not. So that kind of information, index, best performing companies to trust, and benchmarking this with what kind of asset classes which can help to make this country unique and help investors locally and internationally to come and invest in the UAE.
Makes sense.
Khalil? I'll talk about Egypt. Basically, our strategy is focused about segmentation. So it's by age and, of course, the size of the client. So by age, we have products for the 15 to 21, who are the future earners, who are going to put pressure on their siblings and their parents via incremental investment plans. 21 to 35, who are the current earners, and 35 who are preparing to pension, preparing for their clients' education, and so forth. So each of our products are going to be focused on this. What's helping on that is the infrastructure and the regulatory framework in Egypt have been quite progressing. Digital onboarding have been introduced in under the Financial Regulatory Authority, not the central bank yet, which drove basically retail clients from 500,000 5 years ago to 1.5 million as we speak, which drove the total assets under management in the industry from around 100 billion 5 years ago to around 310 billion as we speak. So the regulatory framework, the pressure being put by the market players, or actually the collaboration with the regulator, is what's driving the market forward. So collectively, the penetration rate, basically the savings or the mutual funds in Egypt is currently around 1.5% of GDP. If we compare it to other emerging markets, India, for instance, it's around 20%. If we compare it to developed markets like the US, it's around 70%. So we're way far under-penetrated in the market, and there is lots of opportunities to add value to the client.
Makes sense. I think we can all agree progressive regulation and public-private partnership are key. We could have a whole other panel on that, but unfortunately, we are at time. Thank you to everybody who's joined. Again, thank you to Forbes Middle East and Beltone, and if everyone can give our panelists a round of applause.
Thank you.
Thanks very much.